Before starting off with the video, the first thing that I want to do is thank God. I want to thank God for everything that He has given me, all the loving people, all the resources. I don't think I deserve all of that, but I am being more than blessed. Thank you for so much love. Thank you for this opportunity. The people that I have in my life, they are the pillars of my whole life. Without them, I am nothing. You guys know who you are. And thank you for motivating me, pushing me, and always believing in me. I will try to work harder with full integrity. Thank you. Hello, everyone. Welcome to the very first video of my YouTube channel. I'm very excited about this and a little nervous also because I have nothing planned. I wanted to keep it very raw. So starting off with my brief introduction. My name is Harshain. I'm 23 years old. I recently completed my MBA and I'm very passionate about stock markets. I've been watching the markets from past 8 years and actively trading from the past 3 years. It's been a crazy journey. I have committed so many mistakes and I'm trying to improvise on that. And the whole purpose of this channel is for my trading journey so that I be more accountable for my actions, for my trades, for my words, and if at all, even if it helps a single person improvise their trading journey or get any sort of help, I'll be the happiest. So we'll keep on talking about markets and about my setup, what plan do I use, and we'll also get into analysis part. And before we start off, I just want you to give a I just want to give you a disclaimer that all of this analysis is only for studying. It is not meant for you to invest directly into any sort of security. Please consult your financial advisors. I am not a SEBI-registered advisor, so keep your capital safe. Okay, so we'll talk about my trading view setup. So I use a premium plan uh, which gives 400 price alerts and 400 indicator alerts. It gives us, I think, 25 indicators at the same time. The only use case of that is the alerts part, or else you can also take the trading view plus plan. I would advise that you take it on the black sale. Oh, I'm sorry, the Black Friday sale, so that you get a 70% off on that same plan. That's when it's worth it. So I have listed down few stocks that we'll be talking about today. Before that, I would like to share about my journey so far. So the methodical part about trading is only 20% and it is 80% psychological. You might have heard this a lot of time, but it is actually true. The institutional investors play in accordance of retail investors' fear and greed, and that's when they get trapped and then blame the market itself that it never goes up or the stocks that they hold don't go up. It's not the market, but it's your psyche which is not appropriate for the market. You need to develop that. And by when I'm saying you, that includes me also. I need to include that. You can learn from the best of the people, you can learn the best strategy for the markets, the best edge, but unless you have the mental framework to execute it, you won't make consistent profit. Markets only reward those who have learned good amount of lessons before and stick to their strategy irrespective of the market conditions, irrespective of the macroeconomic activities, irrespective of the fundamentals. I am talking about people following technical analysis because that is what I follow. And I feel technical analysis show a lot about the timing to enter or exit a stock. So the layout that I use for my trading view setup is this one. I use three time frames: 75-minute time frame, 1 day, and the weekly chart. Why 75-minute time frame? Because one day in a day, according to the Indian stock market, we have a total of 375 minutes. And by using the 75-minute time frame, we get 5 complete candles of 1 day. And if somebody might question that why not a hourly chart? Because if you divide 375 by 60, that will come in some decimal. So the problem with that is the last candle that you get, it is an incomplete candle, and that might be confusing when you do your analysis. So 75-minute, and then when you multiply 75 minutes into 5, that's when you get 1 day. Like 375 minutes is daily candle, and when you multiply a daily candle by 5, you get a weekly candle. So we use a factor of 5 for our time frames. And the indicators that I use is RSI, the momentum indicator. For volume, we use MACD. The source of it is volume. And we use the EMAs. Yes, we keep it very simple. It just looks very messy for those who have started off their technical analysis journey, as I have. It does look very different at the start, but trust me, it's easier when you start doing the practice. Okay, so we'll get into the details of the setup as we do our analysis. First stock that we will take is Dixon Technology. Okay, so before starting, the most important thing that we want is to use the top-down approach. The very first time frame that we look at is the weekly time frame. The reason being that the weekly time frame holds much more power than the daily and the 75-minute time frame, because it consists of 5 daily candles and 25 75-minute candles in one weekly candle. So the conclusions that you draw from the weekly candle will hold much more power than the daily and the 75-minute time frame. Hence, whenever you're looking for the trend in any particular stock, you start from the weekly, then you go to the daily, and if both gives a green signal, then you look at the 75-minute time frame for your entry and exit. So whenever starting off with any stock, you go to full screen, you only want the price data to be visible, and then I'll just delete this alert. We'll start off fresh. So we draw our trend lines at the first. So why do we draw trend lines? Trend lines are drawn to see the trajectory of the stock. So all the stocks move in particular channel. It could be a sideways movement, but into that channel we see if the trend lines or the particular stock takes support from the trend lines or resist to a particular trend line. So we'll draw trend lines by using the shortcut key of Alt T. Here I think we'll check, does the bottoms make more sense or the top? Okay. So whenever you are drawing your trend lines, remember that they don't have to be very perfect. Just be free to draw them. It's okay if they are not converging with all the touch points. Having 3-4 touch points for a single trend line is good enough. Okay, so let's see if this makes sense. Okay, okay. So this trend line does make a lot of sense. So you saw, I did not look at every price action, but I got a lot of touch points using this trend line. Use the slow brush tool. So when I drew this line using this whole area and this one, and then I cloned it. How do you clone a trend line? Simply control and click it, and then you can get this. So here also we got this 1, 2, then a little resistance over here, 1 support over here. And you see how beautifully this line acted as a resistance. I did not even see this line, but then it converged with it. So you saw this trend line, how this acted as a support before and then again over here, and a lot of touch points. I did not even see this part when I drew the trend line from this. So this tells that how the stock respects the trend line. So trend line is fungible in nature. Whenever the price is below that trend line, it will act as a resistance, and when the price breaks that part, it will act as a support. So after your trend lines, you can move to the daily chart later on, and you can also draw the internal trend lines with respect to the recent price data. Not necessary that you will get any internal trend line. It's just to see the trajectory of the stock. Okay, this. Alright. After drawing your trend lines, you move to the past data. You see how the stock moves. If it goes into correction, how deep is the correction? You see the whole price data of the stock. So getting to know a stock and getting to know a person is very similar. If I want to trade into particular stock, I need to know if I can trust the stock. Similar Similar to a person, if you want to make a friend, you would obviously want them to open up to you. You would like to hear about their past, and initially you could not trust them. That's the same with the stock. At the initial stage, you cannot trust any stock. You know to know their behavior, how they act when they go into the bullish trend. Are they super trender? Are they momentum mover? These all terminologies we'll get into details when we use the RSI indicator. But for now, just know that you need to know the behavior of any particular stock. So we'll use the date and price range tool to know how deep is the correction of a stock, and whenever it establishes a higher high, how much returns does it give. Just randomly do this activity. You don't have to be perfect in anything. When you see a breakout, so this was a resistance zone, it broke out of here, and that's when I use this tool. After this, what is this correction? And after this breakout, you see the stock does give retest. Retest is basically coming back to the same breakout level and then finally going up. So Dixon Technologies have given a beautiful return in the past few years and still looking good. Okay, so the stock does have a tendency to give deep pullbacks, but then you see the trajectory, it's upward moving trajectory. So the stock is fundamentally good as well. Okay. So we can also use another tool, this Fibonacci retracement tool, to know how much the stock retraces before again rallying. So we'll remove these date and price range drawings and then use this Fibonacci. So how do you use the Fibonacci tool? You simply take the bottom and the peak, the bottom, okay, we'll take this breakout level, and the major peak is this, the bottom peak, okay. So we can do this exercise in each of the time frame. Right now I'm only focusing on the weekly time frame, but you can do this on the daily time frame and you'll get different results. So when we see the stock retraced back to the 38 and the 50% range the first time, okay, this in the second rally it retraced back to again somewhere near the 50% mark, and now in this rally it's only retraced to the 24%, or okay, yep. So the stock has not even gone into deep correction, and on the absolute percentage basis, it's 37%. So 30%, 37% might feel a lot, but this against the rally of 600%, what is 37%? So anyone who might have made a position over here would be thinking what slow or what a bad downtrend the stock has gone into, but it is merely a correction in this beautiful bull trend. RSI also seems pretty good. We'll get into RSI later on. Okay, so fairly the stock goes near to the 50% mark. We'll also do this on the 70 on the daily chart to be more accurate. Just a second. So the same range 38 to 50% mark over here. Here only 24 to 38% range. So this one. Okay, so this was a pretty deep correction. It seems like that the stock went to the 79% mark. So how much is this? Okay, a 58% correction, and you see it's near about 2.5 years that the stock was in correction. So and now it's only retraced to the 24% mark. Okay, so the purpose of this exercise is to know that how deep could be the correction. Has the stock given a very deep correction in the history? If it has, then it also can do it later on. So you have to be vigilant about the corrections of the stock. Okay, so now that we're done with this exercise also, so one thing that I would like to add up here is whenever you are analyzing any stock, you have to be binary with your words. So firstly, I'll tell you the bias that I have with this particular stock. I've already established that it is fundamentally very strong. The growth of this stock is phenomenal in the coming few years, given its presence in the EMS sector. And hence, whenever there is a drawback in this stock, I look for an entry. Do you see where am I going wrong? I look for an entry and I do not assess the stock objectively. If I'm looking for entry, I'll find positive signals and ignore the negative ones. This is known as confirmation bias. which I have into this particular stock. So I'm working on it. I'm not actively trading into this one, and I'm being patient unless and until I get a very good conviction and setup, I would say, not even conviction. Only then you think of entering into the stock. When you are sure that the stock is bullish and not sort of bullish in a sideways movement or bearish, you think of a potential entry. That too will be in accordance to a lot of factors. You will see the momentum, you will also see the volumes, you'll also see the price action, and then make a decision. Okay, so now for Dixon, we'll go back to the commencement of the stock. 2017 was the time. Oh my god, what a rally it has given after the listing. 600 to 19,000 something. On a percentage basis, it's, oh my god, 30 times in how many years? 7 years. But the problem with that is, can you hold it until here even if you had taken the position and it's in the IPO? I don't think so, because this drawback will drive you crazy. I also could not. So whenever I'm mentioning you, that also includes me. And I am trying to improvise myself, learning how to hold my winners, cut my losses. Okay, so we'll use this tool, the replay button, and then see how the stock does after a breakout. Are we getting on the right side of the stock? So what do we see over here? After making a high, the stock went to correction. So far it's gone down by 46%. Right now, you see this zone, this entire zone. So the stock used to take support, took multiple times support, but it never created a higher high. It started creating lower lows and higher lows. Lower lows and lower highs. And finally, when it broke out of this support turned into a resistance. You see, the price resisted this level exactly from this point and then further went down by 22%. And now again it has come to test this level. So what do? We do nothing. We just wait. We wait for this zone to break and then we'll assess it again. Okay. Okay. You see, the stock again resisted. And when we are looking at this level, the stock has not even got into the overbought zone. So first we'll talk a little about the RSI indicator. So why do we see RSI? We see RSI, the momentum indicator, because it shows us the strength of the trend. Let's say, alright, let's see how the stock performs later on. What do we do? Now we'll have to monitor. Once we've entered this position, we'll see if the stock is creating a higher high, then we move our stop loss, we trail our stop loss. You see, isn't this a cheat code? That as soon as we got out of an important resistance with a good volume, the stock is performed On a percentage basis, it's already gone up 31%. In how many days? Just 56 days. Look at this prolonged correction. It's almost 15-16 months correction. This is how patient you need to be when you're following any stock. So basically you have to do nothing. Just just have this one alert of this higher high, and unless and until that stock got out of that zone, you don't bother it. Now, where is the stock? Okay, so unless it crosses this level, we don't, or else we can move our stop loss over here. Okay, this 30% rally is already a lot. You don't have to lose that much. Now we can switch our stop loss to this level. This was supposed to be a small resistance zone, 729, and okay, we can move our stop loss over here. So if the stock corrects, this is also a lot. You don't have to lose this much. 729. Okay. On a percentage basis is 18%. Well, you don't even have to lose that much. Why will you lose your profits? You are already near your target, so better that you keep your stop loss really tight. And you look at the momentum. It is not even breaching the level of 68. So now the stock is showing the tendency of a super trender. What are super trender stocks? The stocks which have once taken the overbought zone, continue to be in that zone and give a massive rally. They don't even have major pullbacks. Sometimes they test the level of 20 EMA, but it's very difficult to catch on to the rally once they have established the higher. So super trenders, if you get on the right side of the trade, it's amazing to be a part of that rally. But again, during the corrections, they go into deep corrections, so that's when you have to be very vigilant. Enough of talking. Now let's see how the stock performs. All right, you see the stock has broken out of the all-time high territory also, and we move our stop loss further up. And we've already achieved a 50%, more than 50% in what? How many days? Just a sec. 84 days. Okay, and we have not even triggered our trailing stop loss. Here it was very near to that, but no, we just changed the stop loss right now, so you have to wait and watch. Okay, so finally we are out of our position over here, 808. So how much is that? So you got out of the trade after a 30% profit, which is pretty good. I think which is pretty good. No, not even 30, it's 26% profit. Okay, so now what do you do about this stock? What is the next entry point? A good entry point, I would say. Okay, well, even this point seems to be a very good entry point. We should have had the stop loss below this level. The reason why I'm saying this because this is the 100 EMA. So here the 20 EMA crossed the 100 EMA and it also crossed the 250 EMA, creating a golden crossover. So after a golden crossover, the pullback back to the 100 EMA is a very good entry opportunity, and you'll get to know why is this a very good entry point. Okay, no problem. We'll wait and watch if we get any other potential entry. Okay, what will be a better entry than pull back to this very same important support and resistance zone? All right, here we again take a position. Yes, absolutely. Our stop loss will be below this low. Because why is this low important? Because from this low only the stock broke out of the resistance, and if the stock reaches this level, then it probably goes into a deeper correction. Again, we would keep the previous high as a target. Although the stock did give a gap down, the volumes on the downside is not promising. Hence, taking a position over here does make sense. Boom. Trust me, I have not done this analysis before, that I have seen the dates of where do I take position. This is the very first time that I'm doing on this stock, and luckily this trade turned out to be in our favor. Okay, so it again created a higher high over here, and after this higher high we move our stop loss to onto this level. We'll keep it below the 100 EM this time. In fact, if a stock is into a very good bull trend, rather than just trading your stop loss, you can also build your position. You see this level being broken by the stock. This is a potential support zone. So if the stock is again testing the level, we'd like to add more. So here I will build onto the position if it comes to here. Well, it does. You see, just after testing this zone, stock again started rallying. It's because the volume is picking up on the upside. It is phenomenally picking up. Oh, this is COVID period. Okay. Still a very small drawback with respect to the COVID crash. Okay. Here we added more, and let's see. There is no stopping to the stock. It has completely gone into the overbought. Now it's started touching the level of 80 also. And what are you going to do? Simply trade your stop loss. Trade your stop loss. The stop loss level will be, you don't have to lose this much. It will be this now. Where did you enter? On a percentage basis, you have, oh my god. See, seeing a stock in hindsight and doing the analysis is absolutely easier, because you see these drawbacks in between, this 10% and even this 12% drawback. That's when you would want to take your profits out. You don't want to lose onto your winners, right? These small drawbacks is when you would want to exit out of the position, but If you would have been patient enough, the 132% rally, then how many days? Only 122. It's more than 1% a single day. Absolutely crazy. Well, we'll see when does our trading stop loss trigger. You see how 20 EMA is acting as a support. The stock is again and again testing 20 EMA, and I told you whenever stock is in a trending whenever a stock is showing super trending characteristics, the 20 EMA will work wonders, and volume pickup is just not stopping. Smart money is still kicking in, and you just have to trade your stop loss. Keep trading, and enjoy the ride. My God, this one trade would have yielded so much. Absolutely no stopping. Below the 100 EMA. My goodness. I wish I was a part of this trade. It's too much. Now, after getting this much profits, 300%, you'll obviously don't want to lose anything. So keep your stop loss really tight, it's fine. Oh my God. Keep trading. Keep trading. So how am I trailing? I'm using any small drawback as a zone of potential support and just keeping my stop loss below that. If at all it comes to test this level and take support, then I'm not stopped out. Okay. So this was a potential retest level. We'll keep a stop loss below this. Okay. The moment the stock. So finally, after getting stopped out of the trade, we got stopped out over here. Just a second. So we ended up getting, oh my God, 5x onto this one trade in a span of 140, that is around 1.5 years. 540 days, sorry. 1.5 years, 5x return in a single trade. Obviously, it's very difficult to hold on to such position. And in fact, we got multiple instances where we could have built onto the position. Like over here, repeated pullbacks to the previous high. You see, again this high was being tested over here, again this high being tested over here, and finally after a long time we got stopped out. And you see, this is why RSI is so important. RSI did not go below the level of 40. So 40 is being considered as a level to watch out for. When this level of 40 gets breached, we say that the trend that was going to continue has deteriorated, and now maybe it could continue later on, but for once we should watch out for our, we should be careful about our entries. So now you see, just a second, the volumes have started increasing on the downside also, and now we'll wait and watch. We'll take no more entries as of now until the stock again establishes a higher high and overbought zone. Now, generally, before even seeing the RSI level, there are very high chances when the stock breaches the level of 40 that it resists the level of 60 again, then gives a pullback. Let's see how it does. Now, this is the resistance zone for now. If it creates a higher high and also goes overbought with good volume, then we'll watch out for entry. Okay, created a higher high. Yes. Good volumes. Yes. Volume pickup is good. Well, this time it did not resist the level of 60. That was just speculation. We any which ways would have not created a position of short. We don't go for short positions. We're only looking for buying side position. Well, you might have a counter view on this, that if you are if you see a bearish trend in a stock, why not take a short position? So from the mentor from which I've learned, they have told me that uh, going short side and long side both are different ball games. So unless you learn the different criterias for both, don't go. In fact, you will have a bias if you have both side positions, then you will be constantly taking positions, because if you are only on one side, then you have to wait patiently for your trade setup to match, and with that time you can always assess the charts more objectively, because you will have the time to view the chart when you don't have your trade on. Remember that if whenever you've built onto a position in any particular stock, it's difficult to assess it objectively. Just a second, no? Give me a moment. Okay, so now we've taken another position over here. A stop loss being below the 100 EMA. Well, targets are open as of now because we're not taking this trend line into consideration. Just give me a moment. If we draw a trend line, well, then the target doesn't match our risk reward. Okay, so we do not take a position as of now because this trend line seems to be a very dominant one. Okay, we wait and watch. If it breaks above this trend line, we only then plan to enter. Alright, it did. It did break this time, again giving opportunity to enter. and now we do enter. So now the absolute risk is also that high. Well, 1:3 target. Let's see if we can achieve this. Our entry got triggered over here. Okay, went into a sideways consolidation. Okay, so what do we do now? Well, changing your stop loss and target is not at all recommended unless you have an objective reason to do so. So here when we see a very big negative divergence over here. So what is a negative divergence? When the price has either established a higher high or created a similar level. When we see a line chart, you see both the levels are similar on a, they're exactly same, but the momentum has shifted drastically, and that's when you get out of the position before your stop loss gets triggered. The another reason to get out of this trade is that the stock is not sustaining above this trend line, the same resistance trend line. So it's better to stay out of this trade. All right, we got out over here, so we made 4-5%. It's not about the 4-5%, but finding a good reason to stay into this trade, because we could incur an opportunity cost over here. It's better that we find a good setup. And you see the volume has dried up, completely dried up. Now we can see a correction coming up. All right, let's see if we are correct or not. The point is not being correct. The point is objectively assessing. And after all, it's a matter of probability. Release yourself from the stress of being right. Make mistakes, be wrong, but manage your risk. That is more important. Here we have managed it well, it seems like. Let's see. Okay. Oh my god. You see, a stop loss would have been triggered. The point is not the stop loss being triggered. The point is it did not make sense to wait over here. Alright. Now let's just switch to, oh my god. We don't have to go to, if we switch the time frame, the replay button doesn't work well. Okay. Now you see the stock did went overbought over here, but then again it's turned negative. And what happens when the stock turns negative? Level of 60 acts as a resistance. We'll again wait for the stock to overbought. You see the volume pick up on the downside, again significant. So there are multiple reasons to be away from the stock, but if you have the bias that the stock is good, we'll keep on adding, why to keep on adding such a stock? It's not about such a stock. Why to keep on adding a stock which is in a downtrend? You wouldn't want to incur opportunity cost. Okay, all right. Here we do see a positive divergence, a small one. Well, not a small one, a good positive divergence. So how is this a positive divergence? The price is making it's the same or in fact a low, and but the RSI showing positive change. It's not coming down. So this is a positive divergence. And generally after a positive divergence, we do see a reversal. But again, we need to see a higher high. What is an important level? Well, this is a pretty important level to watch out for, because that's the same level we took our entry at, and it was the previous high. So as we know, support and resistance zone are fungible in nature. When it breaks, it acts as a resistance. Here it acted as a resistance. Here we don't know yet. We'll have to wait and watch. Okay. Okay, the stock breached this trend line also. We got saved. Alright. Well guys, we have not yet drawn the trend lines, which is not a good practice. Right now I'm doing this in the replay mode, but that's not an excuse to not draw the lines. Just a second. Simply control, click and drag. Okay, so this is also seeming like a good support. But remember guys, we don't take independent decisions like with respect to trend lines or momentum. We see multiple things, multiple time frames to find a potential entry. You cannot view RSI individually, you cannot see the volumes individually. No, you have to club everything and then find a, I won't say a good reason, then find a potential entry point. All right. So, well, now the zone has shifted to this, because this also seems like a good support resistance zone. This was acting as a support, broke, acted as a resistance, and we'll wait for a higher high. You see, we see another positive divergence. How is this a positive divergence? You can always open up the line chart if you're in a confusion. You see, this is a similar level, price is on the similar level, and RSI has shifted in a positive range, and it is a strong positive divergence. Why am I saying that this is a strong positive divergence? Whenever RSI takes support from 30 and no, sorry, reverses from 30 and takes supports from the level of 40, that is a positive divergence. And with respect to negative divergence, this was a strong negative divergence, because this, oh my god, this is a very strong negative divergence, because it touched near the level of 80 and resisted at the level of 60. And resisting at the level of 60 is the most important criteria for a negative divergence to be a prominent one. Anyways, see, price is acting so beautifully to this resistance level. You might be tempted to take a short position over here, but no, you should not. But RSI is showing a beautiful upward trajectory, but that doesn't indicate anything as of now. Well, have we broken up? Yes, we're broken above this level, but you see this, these are just spikes. Well, we did get a closing over here, but no, not a thumbs up from the RSI, not a thumbs up from the volume, but now see the volume pick up. You see the, how does everything happen at the same time? Volume pick up, RSI going overboard. There has to be some reasoning, right? Well, smart money comes in. That's when we go into the trade. We cannot go against the smart money irrespective of your analysis. You might be wrong, your analysis might be the best of it, but it doesn't make sense to go against the tide. Well, Volume pickup is great if you are wanting to take a position. Well, where could you? One area could be over here between both of the EMAs, because only then the risk reward will suit. Otherwise, we'll have to wait for this breach of zone again. Remember the important zone? Well, this is still important, and price will probably reject from that once. Okay, you got your entry. Well, the best entry was over here, but we being impatient, it's okay. As long as your risk reward is making sense, this position over here is all right. And we will choose this zone only because all the EMs are also here. 8% stop and okay. Well, the risk reward is not making sense with respect to this trend line, which is an important one. So we could not have made an entry over here. We would have to wait till this level. Luckily this time we did get a entry, but remember guys, you have to wait till you get a bare minimum of risk reward of 3. Only then it's worth risking your capital. And you see the volume pickup on the upside over here till here. See this pickup. Just watch the price action and the volume. Alright, we got an entry over here. Let's see if we hit our target or SL. Well, again a sort of negative divergence. What do we do now? Well, you have two options over here. Either keep your SL just below the EMA, which is like almost to your cost if you are still wanting to participate and willing to participate in the trade. Otherwise, you can directly get out of it, whatever that you're getting, because this is a strong negative divergence and volume has definitely tried up, and even if it is picking, it's on the price decrease. We again wait and watch. You see level of 14 being breached and you saving up onto this another 6% loss. You have to monitor your trades as well. It's not that you, well, constant monitoring is also bad. Everything in life, you need to have a balance. Whatever is in excess is not helpful. So what do you do now? Stock is again gone below, has it? Yes, it's gone below this important zone, and we again wait for the stock to establish a higher high. Oh my god, there's no stopping. You see, after this negative divergence, where was this? Where did we get out? We got out somewhere over here, below this. My god, massive cool down. Okay, we'll have to wait for a long time. Massive correction. Okay, wait a second. Well, this higher high with good volume pickup, okay. But then, what do we see? What is a major support resistance level? Alright, this level seems to be an important one. It does. What happens after this? We see a good volume pickup, okay, but we did not get any entry opportunity as of now. This is also an important resistance zone for excellent volume pickup on that side, but we do not participate in the stock because our risk reward won't make any sense whatsoever. Okay, okay, the stock has gone crazy. You see, after this breakout, how much is it given? 37% in 19 days. But again, no entry opportunity. This is what happens in a super trending stock. You just don't get entry opportunities. But it's okay. Be patient. You'll get a good one. Well, someone might try to enter over here, but if you remember, see, this is why previous price action plays such an important role. If you have this data over here, if you would have just seen the recent price data, you would never find this important support and resistance zone. And you see, the pullback has such low volume, which is definitely very, very, very lucrative. Well, do we get an opportunity? Yes. Okay. We take an entry over here. Maybe aggressive entry, but seeing the RSI and the volume pickup, definitely worth taking up a trade over here. Trade even at the previous high. Okay. What is an important? Do we have to wait further? No. We got an entry. You see over here. Let's see how does our trade goes. God. Easy peasy seems like, but well, for that you have to wait for like how much time after this negative divergence. So you needed to wait for 194 days, and trust me, when you when you don't have a very big watch list, waiting for this 200 days is like forever, forever. Well, we did achieve our target, but we will keep on trading a stop loss. Whereas the stop loss level will be, well, after this higher high, we would have kept the stop loss below this level, below this low. Okay, but now after the sustenance of this higher high, just a second. All right, so we move our stop loss below this low now, the recent low, and we'll keep our stop loss tight because we've already achieved 1:3 target, and the next target would be the previous high. Let's see. You see, the volume pickup is still so strong. In fact, here we should have added more. We could have added over here more. And I don't think so. Our trailing stop loss will also get triggered. But let's see. Alright, our stop loss moves over here. Okay. Now our stop loss moves over here. Well, already we have captured 50% again. So you might feel that the stock has already performed really well in the past few years. Well, I absolutely agree with you. And the reason is not that I've chosen this stock because it has given such a massive rally. The reason is that even ahead, I feel that this Stock has a very good growth potential, and that is why we are assessing. We're not here to find things in hindsight and then just validate our own point. It's for our own studying purpose, I would say, because again, a disclaimer that I am not a SEBI-registered advisor. Please seek advice from your own financial advisor and only then invest into this security or any security. Okay, let's see how this journey unfolds. You see the crossover over here, the pullback to 100 EMA. I had mentioned that this is probably another entry point. We could have added more position over here with the same stop loss, but if you're already invested a lot, if you've already allocated a lot of capital, then you don't have to. Well, again a higher high, yes, stop loss below this level, keep on trailing, enjoy the ride. Remember, if you could hold on to these kinds of trade, trust me, you've gotten an amazing skill. Just there's no stopping to the stock. Keep on trailing. You just enjoy. Oh my god. Another 2x. In how many days? 24th July 23 to April. July to April. That is about 9 to 10 months. It's just crazy rally. Okay, you keep on trading. Below the 100 EMA is also a good way to trade your profits, and you can also use the 20 EMA, but because your decision making time frame was the daily chart, pull back to 20 EMA is quite normal. Oh my god. Uh, why am I using these levels? You might have question. The stock created a higher high over here. Let me just zoom in. Stock created a higher high over, and if you see multiple entry opportunities, but we are already allocated over here. You see the amount of fear people would be having after this 13% pullback. Who would want to take a position here? That's when the big players get into the market. They use your fear and then make an absolute lot of money. And what, 9 days, 34%? Well, I don't have to tell you how good is that return. Alright, another higher high. Stop loss below this 100 EMA and this low. Let's see. Well, momentum has not shifted, I would say, because if this peak would have been at 60, then I would have told you to get out of the position right away. But no, wait for your stop loss. Another higher high, seems like yes, another pullback to the retest level, another entry opportunity. Why am I saying so? Okay, no. I thought this was a green candle over here. The breakout candle is not having volumes over here. So definitely we would keep our stop loss tighter now. Momentum is also slowing down, I would say. Not shifted yet, not at all. If you're very confused about getting out of the trade, I suggest that you keep your stop loss really tight. So this seems like a previous high. We'll keep it below that, or best way to keep it at below 100 EMA. Okay, it did not get stopped out yet. Another higher high. Stop loss changed. Well, on a percentage basis, you are getting a minimum of 232% in a span of what? How many days is this? Not even 1.5 years. Oof. Well, trail. Just enjoy. Okay, finally you're out of the position. And you ended up with 264%. Well, you see how things change. The stock did not go below the level of 45 until now, and now it has gone. When you are out, exactly the right time when you need to be out. Not necessary that the stock won't rally after this, but now that things have changed in your view, you're out of it. You've already made a good amount of money. I won't say not even good, you made a hefty amount of money. Well, you see, stock did not even touch for once the 250 EMA level when you got into the stock, and now exactly when you're out, it got near to it, which is really nice that you are addressing the stock in the right way. This seems like an important support resistance zone. Again, I will tell this was the breakout level. It took support from here, breached, took resistance, and probably if it breaches the level of 40 also, it would resist at this level again. Let's see. Oh, it did not. In fact, it went above. Well, let's see if we would make a position on the pullback. Let's see. Pullback. Do we have enough volumes? Okay, we have good volume. Okay. Well, we might take a position over here because the volumes have picked up. Well, it's worth to take the position over here. 220 EMA also, and the stop loss below this, and also the 100 EMA is below. So yes, targets again the previous high. So we'll see how our position looks like this time. Where our stop loss got triggered. Alright, we got out of the position. Simple and nice. We again, you see, after breaching the level of 45, see 40 is a general RSI level. Every stock, here we can say, even I won't even say 45. The stock was maintaining a level of 50. If I would have been here, I would have told you that wait for a higher high and the stock to go overbought, which it did over here, and then it also gave a pullback here, after which it gave a rally. Every stock will have a different characteristics. You will have to find what kind of level suit for this stock. Alright. Again we wait for a higher high and the stock to go overbought. Okay. Here it failed to give a higher high, resisted this level, and again you see did not sustain properly, no volume pickup whatsoever. Okay, Still no volume. We wait and watch. Okay, what happened? Okay, I thought why did this chart suddenly stop? But okay, now we are at the recent price data. So you see how fairly we can value the stock over now. Because if we had looked only at this data, we would never find these small inferences that we've drawn. Okay, we'll go out of the replay zone and we'll go on the weekly time frame also. Alright, what do we see? RSI 60 not yet crossed. 1 second. Okay, so if I would have just seen the recent price data, I would have told you to go ahead and buy the stock at the recent pullback. But now I feel this zone, this zone is an important zone where the stock took support also. But this we'll use it as a stop loss level below this, and an entry will be at the 100 level. I'm adding an alert also. The price crossing EMA 100 close message, pull back to 100 EMA after golden crossover. Remember that I have told you that after a golden crossover, pull back to 100 EMA is a beautiful entry point. Let's assess our risk reward. We'll to use this trend line. Perfect. We get a risk reward of 3.21. Well, if you are impatient also, you can take an entry near 16557. You can create GTT orders. I use Zerodha as my broker, so it's very easy to take position. How much allocation? Well, this is a, I would say, super trending stock also, but I decide my allocation with respect to the absolute stop loss. So let's say if I'm having a portfolio of 1 lakh rupees, so the maximum loss I can incur is 1% of my total portfolio, which is 1000 rupees. So if I have to take a position in this stock, I can only buy one stock if I have a capital of 1 lakh. But whatsoever, I end up getting 3300, or rather more than that, which is 3% of my capital, and 3% of a capital in one particular trade is pretty good. So thank you everyone for being very patient. This was about the first video. I know it might have taken a lot of time, but we got a good insights into the stock. I got to know a lot about this stock, and we'll be watching. We'll also keep alert over here about this so that we box the stock and we higher high moving away just to see that we don't miss out on the stock. So this was it for the first video. Thank you guys. See you in the next video. Hello guys, I actually wanted to add another clip to this video. Actually, before posting this video, the entry got triggered and there was this one insight which I had to share with you guys so that you don't end up on the wrong side. So our entry got triggered around this level, the pullback to the 100 EMA which we had discussed, and I exited the stock around 16 to 50. somewhere over here in the very next candle before the stop loss got triggered. Yes. Why did I do that? If you see the volume pickup on the decline, it's massive. It's really massive, and it was not the only reason. This RSI breach that you see around the level of 18, which the stock has not done from the past. So I would say past, when was this? 23. So last, so RSI has not gone to the level of 24 before July 23rd. July 23rd. So this whole rally which we had picked up, RSI was maintaining a level above 24 on the 75-minute time frame, and suddenly even at this is 7th of April, when the tariff had been announced, the RSI did not go below, it didn't even go below 30. So this was the reason I immediately got out of the position, and what we do next in the stock will be discussed in the next video. So just wanted to share that. Thank you so much, guys.